Good evening. This is Ken Long at Tortoise Capital with a review of the weekend trading report for December 3rd, 2017. Markets in bullish volatile conditions. On an annual basis, using NDX 260, we're overbought at a score of 82 out of 100. On a 10-day basis, using the 10-day NDX, we're at 81 out of 100. In the market mosaic, price with respect to the 200-day moving average is white bullish. Slope of the 50 is white bullish. ADX is a strong upward trend at 27.1. These are the holdings for December for the blended monthly rebalancing with the prices as of the close of business on Friday. The risk Z is now just nudging into the above the zero line, so the swing side is still favored, but the possibility of short, sharp intraday adverse moves is still there. Theoretical exposure is 90% in ETF2. Just a quick scroll through the blended monthly rebalancing portfolios. Market health check. So we've had the one-day volatility spike on Friday, puts this move here at risk. Support at 262.5, then 257.5 near the Bollinger Band mean. Still a long, strong bull. Sharp upward move on the 10-period regression line. The 30 is healthy with a slope of 0.24, so it's not an exceptional move yet in the 30. You can see the 200-day moving average, comfortable distance from it there. The jaws of PPO have opened to the upside, so the long side is favorable. ETF2 regional report. Again, markets at 90% invested, 10% cash in the asset allocation model. The S&P at 78 is better than the globals at 75. Inside the U.S., it's small caps, mid caps, then the large caps, then the then tech. Excuse me. Taking a look at the ETF top 30s, oil and energies, Walmart, American Express, home builders, financials, looking pretty good. Long term, the semiconductors as part of the tech surge. Shifting to the daily report. ILF and EEM both firing on the overreaction and channeling systems. A handful of symbols here in the, again, channeling, overreaction, 551W for Mexico and Intel, and then 4 triggering on the auto framer at 2 to 1. The Dow tactical summary. Really, only GE is suffering the most here in the Dow. Just the Intel 551W. Couple channelings and overreactions to choose from here in the ETFs. Latin America, silver, Brazil, and emerging markets testing out okay on the auto framer 551W here in Mexico. In the pinch and stretch report, we got some interesting ones to look at here. The most positive Z stretches, these are the ones that are the most number of standard deviations above their 30-period moving average. You can see XLP and Y looking strong here. The S&P even up there at 3 and 3.8, almost 3.9. Standard deviations stretched above its 30-period moving average. That's really exceptional by definition. The ones that are negatively stretched, really, because they're not even more than -1 SD below, that should tell you but just about how strong that upward move has been in the last 10 days. The most expanded pinch boxes, these are the ones where the river is the widest based on standard deviation. And then the compressed pinch boxes are the ones that are shaping up nicely for Z3 pinches. Notice despite that volatility spike, Freddie, just notice how tightly XIV has been pinched at -1 SD on the width of the river. The super pinches are ones where the daily pinch box is very tight, and also the regression lines are all within tight proximity to each other. So that creates an agreement on fair value combined with lack of volatility in the last 30 days to really coil that spring and ready for an exceptional move out. So gold, silver, XIV, and Caterpillar. For in the auto framer, testing out at better than 2-to-1 on the reward to risk ratio. The usual suspects in the regression line fractal framework. In the green line, these are the ones that are the most numbers of ATR below their RL270, so that's deep value. And then the ones in the red bottom shelf are the ones most advanced beyond their RL270, perhaps overheated a little bit. No squeezes. Just a quick look at the mosaic charts. You can slow those down. This is interesting to note here, the 10-period regression line. The 90 has left the river and the 30 is hooked up. This is a really strong upward condition here. The last time we saw that was somewhere over in this region at the end of a nice run. That's everything that I want to cover today, and we will see you in the chat room. I'm going to put a link into the chat room for a number of these trade frames that test out pretty well for members. We'll be setting up at least 3 of those swing trades based off the pinch and stretch to keep illustrating that point. So, Ken Long at Tortoise Capital, keep your risk measured and your powder dry.